All right, y'all, back to work, but we got non-farm payrolls coming tomorrow, don't we? And boy, the way the charts look tonight, we might have some great breakout pullback opportunities for tomorrow to finish up what has been a fantastic week so far. Hope you guys have all made some money this week. So charts look fantastic. I have a number of great trades I'm watching for tomorrow. We're going to cover all my favorite entries, my favorite targets. I want to make sure by the time we're done tonight, I want to make sure everyone has a game plan, a roadmap to make some money tomorrow morning as well. So enough of the intro. It's going to be back here once again tonight in the video. Thank you so much for tuning in. But let's get this video going though and go find some more winning trades for tomorrow. S&P SPY is all ready to go. Nasdaq triple Qs are all ready to go tonight. I have three really simple but very important clues on the chart tonight that are telling me where I think the winning trades are setting up for tomorrow. One of those big clues, it's right here on the hourly time frames. We're pretty obvious thing right now, pretty bullish right now on the hourly chart on the S&P and SPY, pretty bullish right now on the hourly chart there of the Nasdaq triple Qs. Nasdaq to take out that big high overhead, S&P making its way back to that big high overhead. I like to use these hourly charts to give me the best overall direction. And this will give us a nice idea of this bullish overall directional bias we'll have for tomorrow. But this is not going to help me time the entries for tomorrow. I have two probably more important clues on our calendar and on some tick charts. Let's grab the calendar for tomorrow because one important clue is on the calendar. That's right, tomorrow's non-farm Friday. Now, you know we're going to get some fireworks around that number tomorrow. My goal on a Friday is always to get in as early as I can while the markets are liquid and I'm at my best on a Friday morning. And that non-farm payrolls, well, it's going to wait for the volatility to kind of subside tomorrow and then update our charts and then go looking for trades as early as we can after that news comes out. So be aware of that tomorrow. That's one very big clue. And we're probably going to see some fireworks off of that number tomorrow. So we'll talk about some kind of extreme situation tonight. That way you are ready for any big shots higher or big shots lower we might see in the wake of non-farm payrolls. Okay, so we got one clue is the hourly chart. One clue is the non-farm payrolls tomorrow. Another clue, though, is down on the tick charts. Tick charts, I think tick charts make pattern recognition a whole lot easier. This, of course, is a 7,000 tick chart. You can see all the time frames there in the upper left-hand corner. In case you're watching for the first time right now, that is the 21 EMA. In my opinion, it's the only indicator you need to make consistent profits in any market you want to apply to. I mentioned earlier there's one more important clue here. It's very, very important. In fact, probably the most important clue out of all of them. It's a bullish move up into a trading range. Now, why is that important? Well, because ranges, they act like magnets. And they love to rotate back and forth. You can see I've kind of marked up the amount below and the amount above. So if you understand that range, right, that range is going to want to rotate back and forth here. There are really two easy ways to make money in a bullish range environment. One easy way, and by far my favorite for tomorrow, are bear traps, right, at key support levels down below that trading range. And then, of course, as we go higher, trading breakouts, right, trading breakouts. Now, I have probably 4 different types of bear traps because bear traps come in lots of shapes and sizes. So I want to cover a couple different bear traps down there. The tricky part, the hard part is if we go higher because we don't want to buy high. We don't want to chase it going higher. I have 3 trades I'm watching for if we go higher. One of those 3 might be my favorite trade for tomorrow. So we'll talk about that a bit later on in the video. But first things first though, I would love to get some bear traps down here. Look at that previous trading range. Remember, anytime we see a range breakout, a breakout pullback will be fantastic. Now think about these bear traps. I would love to get this market running lower after non-farm payrolls. This is a horrible spot to sell, right? We're bullish. Range is a magnet there overhead. So I wouldn't want to sell down here, but I'll bet there'll be lots of rookies that will do that exact same thing though. What I'll do is I'm gonna let those bears come in. Let them try once, let them try twice, trap those bears in, because once those bears are trapped in, I can use their stops to fuel that move going higher. And then what I love to do on these is after I get that bear trap winner, I like to add to my position. You know, if you want to make more money, add to your winners. And an easy way to do that is look for a higher high in price. And I want to get right below that prior swing. In our video classes, I call these failure patterns, a 2-try failure, trap the bears in. And this is technically a bear trap entry right below that low. So bear trap and then adding to our winner. And remember, ranges love to rotate, right? So the amount below, the amount above, let that sucker run for tomorrow. Now, one variation of that bear trap is, I'd love to go lower, trap the bears in down here and squeeze back up again. But sometimes we simply don't get that. Sometimes this kind of V bottoms off that low and we don't get any real easy way for a bear trap down there. These can be tricky, but here's how I trade them in our trade room. If we V bottom off that low, I'm then going to start watching for basically a new bull channel. I'm going to draw a trend line off the highs up here. I'm going to bring that trend line down off that low. See that new channel that forms right there? Now, very important, I'm going to look left and try to find one of these prior swings that lines up around the low of that channel. And this is one of my favorite entries in our trade room, because anytime markets kind of V bottom and start grinding higher, they kind of become like a freight train, right? Running higher here. I can get very aggressive on a bear trap or a pullback entry off of that low. Really, any of the entry patterns you guys are learning in the free video classes can be applied on the first test of the low of that channel. And then one last variation of a bear trap is, oftentimes we'll get a nice strong rundown. Oftentimes we'll see bears try once, bears try twice. We'll get that nice strong jump going higher. But you know what? Sometimes this move down is so strong, we'll get our first target. We'll remove all the risk on that trade. It'll be a winning trade. But every once in a while, though, we get another strong shot going lower. We call these retest trades in our trade room. This is not a reversal, all right? This is not a reversal. We're very bullish on the hourly chart. Remember, that's our directional filter. So when I start seeing bears come in and sell up there, where do you think their profit target is? Their profit target is probably down around that low. So you tell me, is that a good place to sell? No, definitely not, right? Not with the range acting as a magnet overhead, overall bullish on the hourly. No, this is a horrible spot to be a seller, which means it's a great place for a bear trap. Now, these retest trades, these double bottoms in an overall bull market are oftentimes the most lucrative trade we see in our trade room, because these tends to fool a lot of rookies. Remember, we're not going to pick a bottom, right? I'm not going to blindly buy that level. I'm going to let those bears try a few times, use their stops to fuel that move going higher. And remember, when you're adding to your winners, you want to see that higher high in price. I want a little bit of separation off that moving average, and then grab that little low right there. Right? Again, I call these failures. It's basically a bear trap, failures, and then add to my winners with that higher high in price and right below that low. That double bottom retest, I'll tell you, these are some of my favorites. Now, I mentioned earlier, we're probably going to get some fireworks around that non-farm payrolls tomorrow. I want to talk about some kind of firework trades here in a moment. Before we do that though, let's slow down for a few moments though, because I know most folks watching right now, you guys know these patterns. You're making money with these. I get so many great emails and comments here on this YouTube channel. You guys making money with these. But if you're here for the first time right now, if you're watching for the first time right now, this might be a brand new language. Bear traps, adding to winners, retests. What the heck is this guy talking about? I totally get it. And not to worry, I teach this entire roadmap. In fact, I have a ton of examples of traps and add-ons and double bottoms and retest trades. I have so much more I want to share with you outside of these YouTube videos. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video series will teach you a stupidly simple trick we use. You'll laugh how simple it is. A simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each morning. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more consistent profits. Guys, bottom line, the markets are way too good right now not to be hitting profit targets each day. So if you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves the trade examples I include in that short video series. The best part is it is 110% free for you. Also, keep in mind too, I'm going to put all the important links we talked about tonight I'm gonna put all the important information, the description of the YouTube video. Start first with the free video classes. Most folks, believe it or not, they start making money all on their own just with that free video course. So start there first. And if you're on Twitter or X, boy, I post a ton of updates during the day, charts and videos and mindset stuff. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more. I'll put them linked up in the description there for you of the YouTube video. All right, so where did we leave off? Now you know where to find more info and learn more about the entry patterns talking about here tonight in this video. I mentioned earlier, we have non-farm payrolls, right, coming tomorrow. And again, keep in mind, I will talk about price going higher here. I will talk about that breakout going higher. I have 3 trades I'm watching for if we go higher. If you like making money, definitely stick around all the way to the end. I'm going to cover those. One of those 3 is my favorite trade for tomorrow. Let's talk about, though, what if we get a big, strong shot running lower here tomorrow after non-farm payrolls? The challenge is yes, I do want to buy down here because we're overall bullish. Range is a magnet overhead. I want to be a buyer down here. But remember, if we see a real strong shot lower from non-farm payrolls, all of that momentum going lower is going to want to pull back and retest that low before we resume that overall bullish trend off the hourly chart. So in these situations, if we see a strong run down, I want to buy it, but I got to be careful about buying too high. So the pattern I want to do is called a crown reversal pattern. It's very similar to that bear trap. I'm going to wait for bears trying once, go higher, bears trying twice. Now, here's the kicker. I don't want to buy as we're going higher. I don't want to buy as we're going higher. Why? Because if it really races lower, it's going to want to what? It's going to want to pull up and retest that low. I don't want to buy as we're going higher. I want to buy as we're going lower. And this is a slight variation when things get crazy around news that'll keep you out of trouble and put you on the right side of that trade. Now, in our free video classes, this is basically a technical bear trap pattern. We call them crown reversals. They kind of look like crown patterns on the chart here. It's a higher high in price. I want to get in right below that low. That way, I'll take my 1-to-1 target. I'll move that stop up to my point of entry. And that way, hopefully I'm wrong. Hopefully it keeps on going. And as it goes higher, right? Hopefully as it goes higher here, we can add more, right? Hopefully I'm wrong. Hopefully I'm being a little too cautious on it and it ends up ripping higher and we can add more, right? As we go. But again, if it really races lower though, I got to be really careful. Buy nice and low, get that 1-to-1 first target. You'll learn that stuff in the free video class. And again, keeps going higher, I'll keep on adding on. But if it doesn't keep going higher and rolls over on me, now I have that first target. Now my stop is moved up, right? Makes sense. And remember, if it rolls back over again, this is not a reversal. We're bullish overall on the hourly, these retest trades. Now, on the retest trade, I can be a lot more aggressive because now I know where that bottom is. The first time around, I don't know where the bottom is yet, right? Be more careful when I don't know where the bottom is. Once I know where the bottom is, remember, anybody who sells here, they become buyers down here. They take their profit. They become profit-taking buyers down there. So again, bad spot to be a seller, great spot for a bear trap. I would not argue about a crown reversal, but all I need here is that classic 2-try failure pattern we teach in the free video classes. Remember, these oftentimes are huge, huge runners. So grab that bear trap entry first, add to my winning trades with these higher high in price and right below that low. And again, I can't emphasize enough how that separation off that moving average is really the key to adding to your winners. You'll see a lot of examples of those inside the free video classes. Okay, it's a bull range. We trade bear traps down below. Now you know some good variations of bear traps below, but now let's talk about going higher. With the right game plan, you can make some easy money going higher. With the wrong game plan, you'll be buying too high, getting shaken out of good trades, only to watch the market go and laugh without you. Let's grab the Nasdaq right now. We'll talk Nasdaq. Nasdaq's getting a bit lonely over here. I see you, NQ. Again, I like to use these hourly charts as an overall directional filter. We know we're bullish right now. Nasdaq clearly has its eye on taking out that 966 there up overhead. Before we dive into the tick charts though on the Nasdaq, if you're enjoying this video right now, please help me grow this channel, will you? By hitting that like button, subscribing, and sharing this video with other trading buddies, because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people. I appreciate you spending a few minutes every evening here on these videos. So thank you so much for the likes, shares, subscribes, and all the ongoing support. Now, I'm done begging for likes here. Let's jump into the Nasdaq here and get our hands dirty here on some tick charts. Remember, tick charts, time charts are nice, but I'll tell you, once you see tick charts, everything gets so much easier on timing the entries here. Now, you'll notice right now on the Nasdaq, one really big clue, same clue as the S&P. We have that bullish run up into a trading range. There's really two ways to make money in a bullish range. One is bear traps down below it, right? We talked about that earlier on the S&P. So the exact same stuff we mentioned earlier on the S&P can be applied. And the second way to do it is to buy a breakout going higher. One small difference you'll notice here on this Nasdaq is, and if you're a student of mine, you know this already. Notice how it pops up and grinds. Now, if you're in my free video classes, you know this already, or a member with us in our trade room. Anytime we have a market that pops and grinds like that, we can draw a trend line off the highs, off those highs right there, bring it down off that low, and my goodness, I mean, come on, right? If the trading gods are watching down on me tonight, this is what I want for tomorrow, right? All kidding aside though, that would be just a primo spot for a bear trap. So I love that area down there, but let's talk about going higher here. So when we go higher here, there's kind of like three different scenarios I always look for. One of them is my favorite. We'll cover that here in a moment. Now, first things first here, whenever markets break out, the key is looking for what we call separation off the moving average. What'll happen is as we go higher, we'll start seeing higher highs in price, but that pullback will not pull back all the way to the 21 EMA. I can't emphasize this enough. Separation equals strength. So an easy way to know when a range is successfully breaking out, it's not just a strong leg up, because remember, ranges are magnets. Ranges love to rotate back and forth. We oftentimes see markets make a strong run up and then right back down again. And again, the amount above, the amount of below, that creates a bear trap down there. Buy it right back up. The same as I mentioned earlier on the S&P. So it's very, very important that if we break out going higher, it's not just one leg, right? It's got to hold the pullback, keep going higher. And in my opinion, it's all about that, again, that separation. Now, that separation, it now allows me now to take nibbles on the way going higher to buy below. That same technique I mentioned earlier about how we add to our winners, right? That same technique, how we add to our winners on the rotation off of that low, it's the same technique here, all right? Same technique there. So if we get that strong run up, if we're seeing some separation off that 21 EMA, I can take some nibbles here, right? Some small positions. These are usually going to be half-size trades, quarter-size positions. I'm not going to go full size on something like that, but a good way to take some nibbles on there, pick up some nickels and dimes, as we call it in our trade room. Now, what's really cool about these patterns is that, remember, whenever we have a range breakout, the breakout leg is a measuring leg, okay? It's always a breakout leg, measuring leg, okay? Always. So that leg that tells me now, if I get in on that bear trap below that low, now I know where that target is, right? Remember, if you want to make more money, hold your winners longer. And of course, that's easier said than done, right? Everyone says, let your winners run. Well, yeah, easy to say, tough to do if you're a rookie. But once you know how to find that target, and you see a couple dozen of these with us in our trade room, you'll get much more patient at letting that sucker run. Okay, so that is the target up there. Now, once we break out of that range now what happens is these ranges, they love to break out pullback. They love it. In fact, I would say, I've been doing this for a long time, almost 20 years now. I would say the most consistent thing I know about trading is that breakout pullbacks, it's not an if, it's a when. It's almost a guarantee you're going to get a breakout pullback. So I always keep them on my mind. What I want to do though is look for what I call a two-legged pullback. What's a two-legged pullback? It's just like it sounds, really. It's one leg below the moving average, second leg. Okay, think about a measured move, A, B, C, D. My favorite ones are the ones go a bit more. My favorite two-legged pullbacks, a little bit more than a measured move. Anyways, that's going to give me the area. And hopefully that area lines up right around the top of that trading range, right? Anywhere around there would be great. Now, I'm not going to blindly buy that. All right. I learned that lesson a long time ago. I'm sure you have learned the lesson a long time ago as well. We don't use indicators for entries and we don't blindly buy and sell. I love in a bull market, I love bear traps. And again, this is that same kind of recipe, right? Let those bears come in and just wrap that rope around their neck, right? Let them come in and try a couple times. That way I know exactly where their pain is. I know where those sellers get in trouble and where they buy their way out. That's the key to these bear traps, right? Make them in pain. Buy right into their stops there and squeeze those stops going higher. Now, in these scenarios, with all that momentum going higher, the buyers want to go where? They want to take out that high. That's their next objective. The markets are always trying to accomplish an objective in a breakout like this is trying to retest the high. Now, you know this one already. As we stop those bears out, do I simply kick back and bask in all my glory? No, right? Want to make more money? Add to your winners. The biggest winners I know are the ones we trap the bears in, we know where the market wants to go, and we get that separation off the moving average, and we add to the winner right below that low, right? This could be like a full-size position, half-size position, right? Adding on as you go. Makes sense, right? Adding on to that winner. That breakout pullback is one of the most consistent trades I know of, almost 20 years of doing this. Now, another version of this that you want to remember about is that, remember, go back to your 60. We're very bullish right now and trying to punch out some of these highs up here. What happens oftentimes is we get a breakout and everyone knows kind of where the market wants to go. It'll pop up and begin to grind. Now, we just talked about this before. What does a grinding market tell us? It's a steamroll. It's a very, very strong trend. I'm not sure exactly why that is, but one thing I've noticed time and time again is when a market pops up like this and begins grinding above that 21 EMA, it is very difficult to stop that market. Also, it tells me I can be a bit more aggressive on my entries. So what I'll do in these situations is I'm going to draw a trend line off those highs. I'm going to bring that trend line down around that low. And boy, I mean, if we're lucky tomorrow, it'll line up right around, some of those prior highs up there. The bottom line though is I want to find a way to buy the first touch of that channel. Now, again, unfortunately, I can't teach all the entry tactics I use in these videos, but that's why I have that free video course. Again, grab the link in the description. Take that free video class. So many examples of these. We see a lot of these in our trade room. You'll be a master at that first test entry. You'll be a master at this before you know it. So this could be a bear trap. This oftentimes is what we call a failure pattern, right? So bears come in, 1, 2. Again, lots of ways in which we can trap bears in and squeeze their stops. Now, on this trade, remember we always, it should be assumed we always look for ways to add to the winners, right? It's assumed we always look for ways to add to the winners. Now, adding to your winners, it sounds so easy, but we all know it's not easy if you don't know where the market wants to go. This pattern, please pay attention now. Pay attention. If there's one thing you take away from this section, remember, the pop leg is the measuring leg. Okay? Again, if we pop up and start grinding, the pop leg is always, there's no situation I could think of, almost 20 years doing this, where it doesn't mean that pop leg is the measuring leg. Okay? So pop leg is the measuring leg. The hardest part about this is remembering when it pulls back, anchor that size, that pop leg, anchor that right there, and bam, that is your final target. These are over and over and over, rinse and repeat. I don't care if you're trading Tesla, Amazon, Nasdaq, it could be Bitcoin. It doesn't matter what you're trading. This pattern happens over and over again. That is that pop and grind channel. Remember, grinding markets, they turn into kind of freight trains, right? Bear traps, add-ons, use that, right? Use that measure move technique I mentioned there a few moments ago. All right, one more here. Let's save the best one for last. The best one for last, and you'll see why I love these as well. Let's now say we pop up into a new trading range. Okay. Now, why would this be my favorite? Well, because whenever we see a new trading range, that range is a magnet. It anchors the market higher. Okay. Also, when I break out of a previous trading range, the previous trading range turns into it's one of the easiest breakout pullbacks. Now, remember, ranges love to rotate. So unlike other situations where we break out, retest the high, right? In a range scenario, we rotate off the low up to that high. This is why in our video classes, we say ranges are oftentimes the most lucrative trades because now you've got that nice strong rotation. It's not just a retest of that high. Now, how do you time the entry? Well, in this case, it's all about bear traps. It's trap the bears in once and twice. I want those stops to get triggered. As we run higher, we're adding to our winners. You got this, right? Adding to our winners. And again, what is the key to adding to your winners? The key is that separation, right? The separation off that moving average. And remember, we don't want to take everything off at the high. I'll always take half off there at the high, right? Put some green on the screen there. So half off there, but leave that runner. Leave that runner as it rotates back and forth. Now, if you want to kind of kick this up a few more notches where things get a bit fun in our trade room, is we'll go up into a trading range. We'll get a head fake first. It'll break out first and then back down again. These are fun because what happens is that rotation off the high comes back down below. What happens is when this thing finishes off that rotation, this will feel like a reversal. In fact, that voice in your head is going to say, whoa, this is really scary. I'm telling you right now, the scarier, the better. The scarier, the better, because that's going to spook a lot of short-term traders. They're going to chase it lower. In my trade room, I always say the best entries are always the scariest ones. You have to be comfortable being a little bit uncomfortable in these situations. Again, this is not a reversal. This is not a reversal. So whatever you do whatever you want, right? Lots of rookies out there will chase this thing lower. They'll chase it lower. It'll run lower. Bears will get short. And again, I swear, you can hear those sellers going, they got me. You can hear the market just squirming as it snaps and runs back higher. Again, these are kind of fun in our trade room because we can kind of feel those bears getting trapped in. Again, add to your winners and trade that rotation back up again. All right, guys, that's the game plan for some bear traps tomorrow morning, right? Some breakouts going higher. I give you guys different variations to consider. And again, if we get a really, really strong shot down, remember, expect that retest, then back up. Grab those crown reversals, as I mentioned earlier on in the video. All right, guys, don't forget tomorrow morning, the place to be is in my trade room, 8 o'clock Eastern time. Come out, learn along, trade along. I'm going to put all the important links you'll need in the description of the YouTube video. Start first on the free video course. Enjoy all the trade examples. Then come join me in the trade room and we'll do it together. In the meantime, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.